Hi, welcome to this midweek market brief. I'm Caroline Woods, and I'm joined by Liz Young. She is Director of Market Strategy for BNY Mellon Investment Management. I want to start by asking you about Tuesday's turnaround. How significant was that bounce, and is it the start of something bigger?
This bounce, it's significant, but I think it's really been on the expectation that we're going to get a fiscal package. And that's why Monday's pullback was so dramatic as well, because we didn't get the package that the market was expecting. So on one hand, it's encouraging to see the market bounce like that. But on the other hand, I don't think that this is necessarily the beginning of a decisive move upward. We still need a lot more information about the spread of the virus. We still need the virus to peak, particularly in the US. And then we need to understand a lot more about when economies can come back online, when people can go back to work, when consumers can go out and start spending like they used to. So there's a lot of question marks left.
All right, so a lot of question marks, a lot of unknowns, but what do you think is priced in at this point? Because we've obviously seen a very large, aggressive downturn as well.
Right. Well, one of the things that I would urge people to remember is that the downturn started happening from fresh highs. So we were at an all-time high in the market. The market was trading, the S&P was trading at 19 times forward earnings at the peak on February 19th. So coming down from that high feels pretty dramatic, but again, we were up at a point that everybody was sort of worried about it being frothy anyway. I think this has felt more dramatic because it happened so quickly. So actually, if we look at it from a historical perspective, down about 30% or so from the peak is not that large when compared to other drawdowns in history, especially drawdowns that include a recession. So actually a 30% drawdown is on the shallower end of that drawdown pool if we end up going into recession. So I think there's a decent amount of bad economic data that's baked into this. Unfortunately, what's not baked in yet is the length of time this goes on for and how it's going to affect company earnings. We've seen a lot of companies already pull their guidance for 2020. So there's still much to be seen as far as uncertainty goes on how this is going to affect revenues and earnings going forward.
So what's your best guess? I mean, I would guess it's not that we've seen the low, but where is the floor?
Well, we always have to remember, too, bottoming is a process. So although we can look back and see a chart later, and maybe we can point out that one day where it got to the lowest point, what you usually see is that the market chops around in a lower range before it chooses to move back upward. So we're probably in the bottoming process right now. At least I'm hopeful that we're in the bottoming process right now, but I don't think we're done with it yet. We still have some bad news to come. We need those first quarter numbers. We need the first quarter economic numbers, and those are going to be probably pretty dismal. So we gotta wait for that to happen. But I am confident that we've at least started the bottoming phase.